Hi, it's Larry Gaines, Power Cycle Trading. I wanted to go over a trade that I put on yesterday on Google, just to kind of show you a couple different trading ideas and ways to trade this market using weekly options. Anyway, Google, I've been had a couple of shorts on it already, and I went short again yesterday. Google, you can see here, this is a weekly time frame for Google. And basically, my trade analysis, I've got my daily time frame, which I call medium term. Short the NQ. Our system is short the NQ. Went short the 22nd of May. It also went short Google on the 22nd of May. So our cycle model is showing a cycle high here, and show you the next major level support is 844 right here, this pivot high extension. And then after that, you go to the daily, and you can see the 50-day moving average, which is down here at 835. So I think there will be a lot of interest, more interest for funds and institutions to start looking to buy Google when it approaches closer to this 50-day moving average. You'll get some major interest wanting to buy back into Google. Right now, you can see it's broken the 21 EMA, and it's kind of in this kind of zone here, where the next real support doesn't really come in until about 840 right here, and then the 50. So I think you'll start seeing some buying interest coming in around this area to the 50 versus right in here. So the basic trade I did, I like to analyze the market based on direction, based on my trading model, and based on everything that I'm looking at, and then I'll put on a trade strategy to take advantage of direction. So I did a weekly put ladder spread. I bought the 855 puts, sold the 850 puts, so I have a vertical put spread on there, and then I sold another leg below that at 825 down here to add additional financing for this particular trade. So I was able to get in this trade for about 80 cents. So my downside risk is right down here at 825, but the major meat of this trade is if it closes below 850. So if it closes below 850, I'll make $380 a contract plus the premium, as long as it doesn't close above below 825, plus that premium that I collected there. So the way I'll look to manage it is to, as it comes down here, I'm getting time decay, taking advantage of theta on the weekly options that expire on Friday. So I'll keep you posted on the trade to see how it goes, but that's a trade I did yesterday, and something you could have still gotten into today, and perhaps tomorrow we'll see what happens. So it's a defined risk trade, and it takes advantage of an overbought situation and playing my cycle model plus the moving averages for support. So good luck trading, and talk to you on the next video. Oh, just one more thing. I like using the weeklies because in options, because there's so many different ways that you can manage these trades. So with knowing how to play time decay, there's a lot of different things that you can do to make adjustments, and so that's another really big beneficial factor. One more thing I wanted to point out too is that the NASDAQ and the S&P futures, the NASDAQ, the S&P, and the looks like the Russell 2000 and the YM, they're all into a squeeze, a volatility squeeze, and let me show you that real quick. Now that's another reason that I like being short something, and Google's not a bad underlying stock or something to be short of. We have a squeeze going on here on the NASDAQ 100. You can see it's been in the 3-bar squeeze here. Right now the indication is the probability is for this to trigger to the downside based on our model. So if you can break this pivot low extension here at 2962, then the 50-day moving average is down here. That's on the NASDAQ. Here's the S&P futures. So here's the S&P futures. It's a daily time frame. You see it's in a 2-bar squeeze. If it triggers, here's the 50 moving average. This will be the next support level at around 1600. 1610 in this area to 1600, and then here's the Russell. Russell's been the strongest, of the markets right now. That's the Russell. It's also in a squeeze, and then the Dow futures. Let me get rid of this stuff here. And here's the Dow futures. It's also in a squeeze. So it's going to either, in a squeeze, it's a consolidation phase. So it's going to either squeeze in here, volatility narrows in, and it's going to break hard to the upside or break hard to the downside. So we'll see what happens over the next couple of days. But right now, our indicators are saying that the higher probability direction right today is for it to trigger to the downside. But that can change a lot. So good luck trading. Talk to you on the next video.